Welcome to the Bridge Capital Market Observations Call for the week of February the 6th, 2023. I'm your host, Eric Jefferson, and to kick things off here, have a few quick words from our legal team. With that, I want to start by recapping last week as we normally do. Market up about 1.5%. That was following a big update on Wednesday, where we heard from the Federal Reserve. They announced an additional 25 basis points of rate hikes. That was widely expected, but interestingly enough, many sort of described Chairman Powell's press conference afterwards as being far less hawkish than anticipated. The market viewed that as the all clear to go risk on, and we saw stocks rip much higher. As we sort of take a step back and just think about where we are 5 weeks into the trading year, through the market close last Thursday. Interestingly enough, we have seen stocks approach nearly double-digit gains, but when we look at where those gains are coming from, the higher quality, more fundamentally sound, less expensive stocks, virtually flat on the year, versus the more speculative, less fundamentally sound stocks up meaningful in most cases double digits. To specifically quantify that, if you look at the performance of the top 10 best performing stocks in the S&P 500 year to date, they're on average up over 50%. The price to earnings ratio, or PE, which is a way to gauge how expensive their earnings are relative to the market, average PE ratio 43 times. Again, we think a market today currently trading in the 18-19 range. So it is stocks that are 3 times more expensive relative to the market that are the ones actually being rewarded by participants. Obviously, the market is subject to knee-jerk reactions all the time. That being said, typically or historically, it is less expensive companies versus more expensive companies that tend to outperform longer term. Certainly this year, it has been anything but. Fast forward, though, on Friday, we received a payrolls report. This is arguably one of the most important metrics when you think about the strength of the labor market. This counted the number of new jobs added, or overall payrolls. The figure reported absolutely smashed expectations, almost 3 times what experts were anticipating. And that has both good and bad components to it. On the good hand, we didn't see a huge uptick in wages. Now, that is good for workers. However, wage growth tends to be highly correlated with inflation. Obviously, right now, we are facing still historically unacceptable levels of inflation. Our Fed is doing everything they can to bring that down. The flip side, though, where we did see such a strong labor market, in many ways, that does suggest our economy is capable of handling or tolerating more pain or medicine to cure inflation. That medicine, of course, being interest rates. And so we saw all of a sudden markets take a step back and maybe reevaluate what is the outlook or what is the path for rates going from here. From my view, don't necessarily see meaningfully higher rates, and all expectations, market or Fed will raise another 25 basis points next week, then likely pause. Powell has indicated time and time again he will be data dependent, so will adjust his policies based on what the underlying his data is telling us. That in some ways was a disconnect between what the market was expecting, which is that rates would be cut beginning in a matter of quarters. And all of a sudden, we get this unexpectedly strong data report. Now, granted, it is one metric. One metric does not form a trend, but certainly you have seen the market on Friday and early trading today start to potentially rethink that position going forward. Again, it was the prospect of rates being cut later this year that in many ways was buoying some of those much more speculative companies out of the gate. And turning to the geopolitical front, likely saw headlines over the weekend. A Chinese surveillance balloon recently shot down by our military. That is in the process being gathered and analyzed today. Number of different opinions, forecasts, rationales for what was going on and why. At the end of the day, best summary that I came across was Anne-Marie Horton of Bloomberg. She in essence, speculated that this was more of a political move by Xi Jinping to appeal to the nationalists within his country. Obviously, the timing of this is very curious, as our Secretary of State headed or slated to make an official visit over there very soon. No immediate impacts or fallouts from this, but obviously just nothing to reduce the political tensions between our two nations that obviously have been steadily increasing both recently and over the last handful of years. Fast forward, when you think about the week ahead, though, quiet week with respect to market or economic data. We do have the State of the Union on Tuesday, and then on a lighter note, Super Bowl Sunday. Interestingly enough, first time two brothers will face off. Certainly worth tuning in for. And then finally, on the sports front, LeBron James, love him or hate him, 36 points away from securing the all-time NBA scoring record that is from or currently held by Kareem. LeBron's LA Lakers scheduled to play 3 games this week, so all expectations. We will have a new all-time score by this time next week. And then on a friendly note, Valentine's Day, 8 days from now. So your reminder, go out, make those dinner reservations, order those flowers ahead of time. That's all for today. As always, happy to discuss anything in more detail. If you don't connect, have a great rest of the week. Take care.